All right. Happy Sunday, traders. Welcome to our weekly webinar. Thank you guys so much for being here, and thank you so much for the support. So we're going to go ahead. We're going to be looking at the charts for the week of April 2nd. It is actually a new month also, so we're going to be seeing a couple things this week. And as far as the news goes, we're going to have NFP on Friday, but for those of you guys that are tuning in for your first time, I noticed there's a lot of new faces in the chat today. So if you guys have any questions, feel free to go ahead and ask them throughout the whole session. But if you guys are new to these weekly webinars, my name is David Schinkel. I am the CEO and founder of Positive Traders. I do these Sunday webinars every Sunday. That way I can give people an outlook on my personal opinion, my views on the market. And so with that, I always do want to give out my disclaimer that, my opinions, you guys are going to see that we're pretty much going to be working on the weekly time frame, the daily time frame. A couple of pairs we're going to be moving down, looking at it on the 4-hour. So we're looking at higher time frames, and this is just my opinion, right? So, take everything with a grain of salt. Don't just take, if I say, my opinion on something is this, don't just go and buy or sell right after the markets. Please definitely use your own judgment before entering a trade. But if you want to learn a little bit more about what we do, you can visit our website. It is right here, just www.positivetraders.us. Check it out if you guys want to, if you like what you hear. But first and foremost, I do want to start off by looking at the economic. And yes, Danny, this will be recorded and thrown on our YouTube. So if you just YouTube Positive Traders, you'll see our weekly webinars on there. But I always start off by looking at the economic calendar for the week on these webinars. So it is pretty light in the beginning of the week. Monday, we do have some news. We have the interest rate decision for the Australian dollar. So nothing really for the US dollar in the beginning of the week, a couple things. But as we move towards the end of the week, in the middle of the week, okay, so Wednesday, if you guys check this out, we actually do have a bunch of news for the dollar. We have ADP non-farm employment change, which is basically like ADP, NFP. And then we have FOMC. That's a huge thing, right? This is my time, of course. So noon my time, which is going to be 3 p.m. Eastern time if you live in Florida or New York or on the East Coast or something like that. FOMC is going to be on Wednesday. Be definitely aware of that. That's huge news for the dollar. That they're basically going to be talking about. They're going to release the minutes. Okay, so if you guys don't know about the meeting minutes, you can actually find those. Here's the link. Let me go ahead and put that right here. I'll go ahead and I'll put this in the chat for you guys. Okay, so there's the link in the chat. You can click on that and bookmark it and save it. Okay, you can actually come on here. And on the day of, okay, so it's not showing it yet, but on the day of right here, you'll actually be able to see the minutes will pop up, right? So this was actually the last minutes. And this is just curious. I mean, this is just for you guys if you're curious, if you're really trying to take Forex seriously and learn the fundamentals and just learn not just the technicals, right, which are always great. The technicals are great, right? I trade like 80% technical, 20% fundamental, I'd say, if I had to rate it. But it's good sometimes if you want to learn about what's happening with the dollar, because the dollar pretty much controls what's going on with the market. So you can actually click on like the PDF and then it'll pop up right there for you, the whole meeting, the minutes for you. Now you don't have to read like the entire thing. It's kind of long sometimes. Oh, this one's actually not too long. It's only about 10 pages. So it's not too long. I definitely recommend reading it. But usually I'll read towards the couple last 5 or 10 pages where they actually talk about their opinion and moving forward and what they plan on doing with the economy. So this kind of gives you basically an idea of what the Federal Reserve is thinking about on the dollar. So not to get too sidetracked, but that's in case some of you guys really want to learn that type of stuff. All right, Thursday is pretty much empty, but then Friday we have an NFP, non-farm payroll on Friday, right? So we have unemployment rates, non-farm payroll, and average hourly earnings, okay? One thing I do want to tell you guys right now, here's a little tip, okay? So if you guys are trading the news, I don't personally recommend trading the news, but if you're on a demo account, you're just trying to play around, you're just trying to mess around, with like, a couple bucks or something like that, then that's fine. But like if you're trading serious money, like thousands and thousands of dollars or even hundreds of dollars, you don't want to be just like trading the news, going in and just like basically gambling your money on which direction the market's going to move. But I do want to tell you, like, out of these three things that do get released, okay, probably I'd say right now, everything kind of like trends and changes in the markets a little bit, but right now the main piece of these three news that comes out they all come out at the same time, of course, but the most important one that's been moving the market the most most recently, the past like 6 months or so, is the average hourly earnings. So pretty much based on like what this number has been, is pretty much giving you an idea of which direction the dollar is going to be moving. So is there a way to see the charts from the last time similar news was released on the currency? Yes. Yeah, Sharjeel. So you can, I can do this on like a private webinar or whatnot. I don't want to draw out the weekly webinars too long, but I'll tell you how, like, just real quickly. So like if you wanted to see, for instance, average hourly earnings for the last month, right? Because it says M over M, which is month over month. You can actually click right here and it'll show you right here the history. And then you can see right here what the forecast was, what it was previously, what it actually came out of. And then what you can do is you can go back on the charts. You could go on Trading View. You could go look at like, for instance, Euro USD or something that's, heavily influenced by the dollar news. And then you can go and like see. But you can actually even see, if you actually go and look at like last month's NFP, right? I believe last month's NFP was actually decently strong, but the average hourly earnings, if you see, was actually weaker than forecasted, and we still saw a sell-off on the dollar. So the average hourly earnings is pretty heavily influenced on what happens on this Friday release. Not so much on non-farm payrolls, but you can see the forecast for this month. So let's just jump straight into technical analysis, but definitely make sure you guys, if you don't have a little calendar, just go down to, Office Depot or Walmart or something like that and get yourself a little, like, usually they sell them, like, mine is like 6 months at a time, but they, sometimes you can get them for a year, but they're like a little planner, sometimes you use them in university or something like that, but it has little like boxes for every single day for each week. And then you just go in and you just put in the most important news, right? Like, NFP, which you should just know is the first Friday of every month, with the exception of like last month actually. But anyways, let's just jump right into it, guys. So keeping in mind that this week will be pretty fundamentally influenced with the things like we have, our ADP, we have our like just a bunch of news for the dollar all week. So it's going to be pretty much heavily influenced on what happens on the charts, or heavily influencing what happens on the charts. So let's go ahead and just look at gold right now. Gold is still, kind of moving sideways. It's in a lot of consolidation. When we look at this pair though, on the daily chart, right before we actually started recording, I was actually showing this level right here. Okay, we have the 50% retracement level, and why this level is important, right, is because this is our 50% retracement level of the 2016 high to the 2016 low, right? This is right at the end of 2016, and this is actually right about in the middle of 2016, the June, July area. So these are the highs and the lows of gold, and we have this fibbed out. Fibbing is obviously pretty standard to use to identify, areas where you may see price reverse on a retracement. So 50% retracement level is pretty strong, and we can see some previous, not just the 50% retracement level, but also on a technical standpoint, right? If we were to just like remove that fib level, we can see, we have this support level right here, and then 2 levels of resistance currently, all like right around this 50% retracement level. So this is definitely a significant level. It is being held right now, as resistance. We haven't really seen a breakthrough. We've actually seen like a double top made on the 4-hour. So it's going to be interesting to see what happens. We're going to be looking at the dollar. The dollar's actually at some pretty key levels right now. But ultimately, I have to say it does look like just ultimately it looks like I don't really know what's going to happen on gold because it's sitting at the 50% level. But, I obviously did some analysis before we started the webinar here, and it looks like ultimately the dollar right now could possibly be still looking to strengthen a little bit, but I don't want to like call a direction on the dollar right now because we're going to look at it right now. We'll just jump to it real quick so you guys can see. So I always talk about doing my analysis, starting on higher time frames and marking key levels of support or resistance and then scaling down. And that prevents you from having to like clear your charts every single week, right? Like we don't have to delete this, this green line, this very top green line. We don't have to delete that because it goes back pretty far. So we're going to keep that on there. We don't need to have to delete that every week and then keep putting that back. But so just so you guys can get an idea, this top level is, our previous level, this flag that we were actually in for a very long time. You guys can see if we work on these higher time frames, because I really like working on the higher time frames to identify, which price direction is moving overall. We have this giant flag, and then more specifically, this previous resistance up here, which we're actually at right now. So if we actually zoom in, scale in a little bit, we can see we're actually kind of right at that level right here. So, oops, I apologize, guys. Let me back real quick. I hit my bookmarks bar. I always do that from time to time. Sorry, guys. Sheldon, you're saying my chart is dated and timed. Yeah, so I have my, right down here, you can actually click time zone and you can set your charts to like your time zone. So it's set to mine. Oh wait, you say meaning everything that happened has a date. Yeah, that's right. Yeah, everything has a date and the time it happened at. Yep. Definitely. So sorry guys, sorry. So just getting back on track to the dollar index. So you guys can see we're right at that level right now. We're right at that previous resistance level. It kind of comes into play with this kind of resistance right in here. So it's going to be interesting to see what happens. But ultimately, we are looking at the dollar, making a series of, it is breaking, once it kind of broke this area right here, that kind of started this bullish trend. So it is kind of lingering right now. So on the daily, this can go both ways. Some people can say, based on price action, on the daily chart, it looks like it's going to drop, but it's still Sunday, right? Anything can happen. This candle hasn't closed, right? If this candle had closed like with this like red candle that it's made right now, then yeah, possibly maybe looking for some more selling of the dollar, but this candle is still open. It's very fresh, right? It doesn't, this candle could still end up very well being like a big blue candle. There could be, some big buying in the dollar. So we really have to kind of see where the next couple candles close, but and especially because just looking at it on a more, on a lower spectrum, really scaling in, trying to identify where you can get a trade in at right now on the dollar. Because this is ultimately, again, guys, remember, dollar index is the opposite of Euro USD. So pretty much what you're looking at doing on the dollar index, you're looking at doing the opposite on Euro USD. So that helps you kind of like get set up for a trade. But right now the dollar index is moving sideways, right? So it's just moving sideways. One has to break out to the downside or to the upside before looking to take a trade on it. And not just break, but we need to see a close, right? On the 4 hour, the daily, we need to see a close. All right. So same thing with Euro USD, right? Euro USD still is in a downtrend, right? We look at on the 4 hour, still consolidating, still sideways. We look at on the daily, it's got this blue candle. So you don't really want to be faked out by this. Yeah, you could get lucky and buy down here and it very well could go up. But this could always be a fake out to trap traders to be able to buying right in this area. Just because the candle is blue and it looks like it's going up when really, the true trend is still to the downside, which it is on the 4 hour, right? We're still to the downside on Euro USD. So, until I see signs otherwise, I'm just kind of on the sidelines, but I would be, they say the trend is your friend, right? The trend is your friend. And more times than not, the trend has been my friend and it's worked out more times than not. So when they say trend is your friend, that's definitely true. And we have this pretty strong downtrend that came in, last week. So I think that we're still looking at some possible selling on Euro USD, which means some strength in the dollar. But we're going to see what happens. We look at NFP too, just real quick to go look and see the forecast for NFP. Unemployment rate is forecasted to stay the same, which overall 4.7%. If you look at like the history of unemployment rates, the past, let's say, decade, 10 years in the US, that's very low, right? That's actually like right up. That's probably like the lowest it has been in like the past like eight or 9 years. So that's really good. Non-farm employment, the actual NFP number is forecasted to come in at only 176,000, and average hourly earnings is forecast to come out at the same as it did last month, which is 0.2%. So that's kind of like really, a toss-up right there, right? That's not really any clear, we don't have three, pieces of data that are all like, okay, it's supposed to be really bad or for the dollar, it's supposed to be really good for the dollar. We have a low unemployment rate that's supposed to stay, that's supposed to be good. Average hourly earnings at 0.2%. Last month, 0.2% wasn't very good, but, we would have to see what happens. NFP, obviously, 176 isn't going to be very good, so we'll have to see what happens there. But let's see, ADP, non-farm employment changes forecast to be much lower than it was last month also. So PMI is forecast to be lower. So, there is some signs pointing to, fundamentally that there could be some selling of the dollar. But, how many times, I think if we were like in a classroom right now and I had everybody raise their hand, how many times have you looked at the news, right, and it looks so good and it ends up just being too good to be true, right? It just is too good, right? Everything is saying, sell one thing. Sometimes it will end up going in your favor. Other times it's not. And that's one reason I don't like to specifically trade just based on fundamentals, is because of the technicals. I think they really take over, and the fundamentals, I think it's really like gambling, right? It's really like a toss-up. Really, the forecast really doesn't have anything to do with anything. Really just depends on what the real actual number that comes out. And so I've seen forecasts be completely wrong. I've seen forecasts be spot on. I've seen things be better than the forecast. So I've seen everything across the board, but that's, why I don't really trade the news. But Albert, you said in case NFP is predicted to 178, what will be the trend for Euro USD? Well, as I mentioned before, I'll just say this real quickly. As I mentioned before, lately, so keep in mind that it's not just NFP that comes out. We have NFP, which is this middle one right here. Then we have the unemployment rate, right? And then we have the average hourly earnings. And lately, this right here, the average hourly earnings, right? This number right here, this has actually been moving the markets more than what NFP and the unemployment rate have been doing. So, I would say that if, this is just like my speculation, that if we saw, let's say we saw like a good average hourly earnings, like 0.3%, and let's say we saw unemployment rate stay at 4.7%, and non-farm employment change was, let's say it was like right around it, like 180K or like 185 or 190K, or even if it was 176K, even if this came out at 176K, I think that if the average hourly earnings came out stronger than expected at 0.3% and unemployment rate stayed low at 4.7%, that we'd still be looking at a bullish dollar, right? But there's a lot of news that say that the dollar is going to sell off. So, Albert, I don't really like to say like what I think is going to happen just based off of the NFP number, just because in the most recent months, we've been seeing the average hourly earnings really taking over. We've seen, even if with really strong, because this happened last month, right? You can actually see, so last month, non-farm, just one quick little thing, guys. Look, NFP last month was 235,000, but the average hourly earnings came out at 0.2%. And it was, we just looked at this at the beginning, if you guys remember, it said that last month, the forecast for average hourly earnings was supposed to be 0.3%. You can actually see that right here. Right here, forecast 0.3%, right? And it came out at 0.2%. So it came out worse than expected. And if you actually go back and you look at the charts on the first or on NFP of last month, you'll see that there was a dollar sell-off when this happened, right? There wasn't, a lot of people started buying the dollar because NFP came out really strong, right? We look at NFP, look what it came out at. See, the forecast was 196,000 and the actual was 235,000. And the same thing happened the month before. The same thing happened the month before. We saw a week, if we go and look at average hourly earnings, see, we saw weaker than expectations, right? Or weaker than forecasted average hourly earnings. So 2 months in a row, we've seen really strong NFP when they've been forecasted to be either like not that good or like, basically not that good, and bad average hourly earnings. And we've seen a sell off on the dollar. So if that tells you anything, all right, or if that gives you like any clues of what's going on. So anyways, let's move along. Overall, we're kind of just looking to see what happens right now with the dollar index, because if we see the dollar index go down, right, then we're going to see Euro USD move up, right? But if we do see the dollar index break this resistance and stay in this flag and continue moving higher, then of course we're going to see Euro USD continue moving lower. So just kind of sitting on the sidelines to see what happens at this point. USD Swiss franc got faked out a couple times on this pair last week in the premium group, but overall our analysis was spot on, right? We took a sell right in this area, and we actually took a sell in this area. So we actually hit take profit 2 on both of them. And then this trade right here, it hit our take profit actually after getting hit. Our stop loss got hit by 1 pip and then went all the way to take profit. So that was kind of a bummer, but these 2 trades were nice and pretty clean. So overall, USD Swiss franc, last week we were looking at, beginning of the week, we were looking at still like very bearish on the dollar. But once we saw that downtrend kind of start to break, pretty much when we saw like this happen, right, we saw this bullish flag kind of start to happen. That's kind of when we started to look for, opportunities to be buying USD Swiss franc. So overall, USD Swiss franc, it's just like the opposite of Euro USD right now, right? It's still bullish. The bullish trend is still, I'm just going to delete this so it's not cluttering the charts too much. Bullish trend is still intact, right? It's broken above this resistance level. It came down. We even got the retest in this area. It's been moving higher. So we should still be moving higher on a bullish dollar. But again, anything can happen at this point. We're keeping our eye on the dollar index. If the dollar index starts to drop off, then we'll probably see USD Swiss franc start to drop off as well. Pound dollar, not too interested in trading this pair right now. I'll just keep it as simple as that. Why I'm not interested in trading this pair too much is because, we're looking at, possible opportunities of selling Euro USD, which is looking at a strong dollar, but, pound dollar is just kind of moving sideways, moving up a little bit, not really giving us any clear direction right now. So not interested in trading pound dollar. Definitely still not interested in trading pound yen. If you guys look at this, this just been a nightmare. If you have been trading it, just a complete nightmare, right? There's been a lot of fake outs on this pair. It's just been moving sideways. We actually, last time we looked at it, it had been in consolidation for more than 30 days. So let's look at it now. 38 days now. Another week has gone by, just consolidation, right? We had a pretty solid fake out down in this area, moved right back up. Now we're right back up in this zone, right? Just look at this, right? So that's why I like to, look at a lot of pairs on higher time frames. Look at that consolidation. That's pretty insane. Last time we saw some consolidation like that, was like down in this area, and then we saw a giant push. So this could be hinting at, or not, it not could be, it definitely is hinting at, things. It's anytime you see a lot of consolidation, it works like kind of like a spring. It's like kind of like loading up, like the spring's kind of like loading up, and then it's going to like pop in one direction. So yeah, Danny said this is going to blast sooner or later. Exactly. Yeah. At one point we are going to get, definitely a clear breakout on this pair. And it's going to give us a good opportunity to trade, possibly catch, a pretty solid amount of pips. But, even last consolidation, right? We saw a lot of consolidation back in here, just to give you an example of last time we saw a lot of consolidation and then finally a big breakout. So, it's going to be kind of interesting to see what happens. But, in my opinion, I think that this pair is probably going to break out to the upside long term and follow USDJPY, okay, dollar yen. So again, okay, so just recap pound yen, I said not interested in trading it, but what if it does break the resistance or support once we do get some breakout, or once we do get a breakout of this zone, then we'll be interested in trading it. All right, AUDUSD. All right, AUDUSD and NZDUSD. Not super clear what's going on with this pair right now. I do want to actually look at a couple things though. AUDUSD, this weekly resistance last week, it actually ended up holding, right? So, and this is why I like to wait in the beginning of the week, because on the weekly webinar, I talked about, possibly looking for buys on this pair. Or I'm sorry, that was actually the week before. Sorry guys, scratch that, never mind. We're looking at this on the weekly time frame. So the weekly, this weekly zone has just absolutely just held like crazy, right? We've been talking about the weekly zone on both pairs, NZDUSD and AUDUSD, this weekly resistance zone for quite a while. AUDUSD more so though, because it's been, closer to that zone. NZDUSD is quite lower than that, but we're just kind of moving sideways right now. A lot of consolidation on this pair. But overall, if we do see, a break of this support, then I would be looking to sell this pair down to like this level right here. And I think if we do see the dollar continue to strengthen, which, is going to, I think going to be my bias, but I'm still need to see what happens at this level right here, because, at this point, at this very second, it looks like it's reversing, but like we talked about earlier, this is just one daily candle that hasn't even closed yet. So it could end up going blue and being very bullish. So, and if that happens, we should see AUDUSD continue moving lower. And then I think if we actually fib this out there, this is an important level. I want to see, I think this is like the 50% level. Yeah, that's right. So if we look at this right here is the 50% retracement level. So it's a little sticky to trade right now. This pair, this still a little sticky to get an entry. I'd like to see this support broken and then getting in a sell down in this area once the support is broken, taking it down to like the 75 level. Because that's a solid, you don't have to be greedy when you trade. That's a nice 100 pips. You don't need to catch that extra, 30 pips before you get in. Get that confirmation rather than that greed essentially getting in right away. NZDUSD, let me fib this out also. I think this was a kind of a significant level too. Yeah, we're right around that 50% retracement level also on this pair. Still kind of interested in seeing what's going to happen to the dollar right now. So again, sorry to sound boring to start the week off, guys, but it really has to do, if you guys understand the way the markets move and really some people trade other pairs. So some pairs some pairs have nothing to do with the dollar. But if you guys look at these pairs, these are all the pairs that I trade. So if you guys are new, I don't jump around from different pair to different pair. I stick with these pairs all to the side right here, and I only trade these. I don't branch off and trade anything else. And it's because I have a strategy that works. I've made a good amount of money and I made a living, building a strategy off this. And, it's kind of like the saying, if it's not broken, don't fix it. So it works very well for me. So there are times I'm going to have to be patient because, since they all pretty much revolve around the dollar, I can't really do anything sometimes if the dollar is not moving. But overall, like I said, it's made me a living trading these pairs. So that's why I stick to doing this. So sometimes it can sound a little bit boring, when we're waiting on one thing to happen, when we're waiting on one thing, which is what's going to happen to the dollar, that influences all these pairs, right? If you look at all these pairs, right, gold is influenced by the dollar very heavily. Euro USD, obviously. USD Swiss franc, obviously, right? Pound dollar, obviously, right? Any pair that has the dollar symbol in it is going to be influenced by what happens with the dollar. The only one that really isn't is pound yen, right? But, it very heavily follows the trends of the pound dollar and USDJPY. So, those they all have a correlation. There's charts out there called like market correlation charts, and you can actually go and see how each pair, how much or negative, how positively or negatively each pair affects each other, correlates to each other. But all of these pretty much in some shape or form are influenced by what happens to the dollar. So Overall, New Zealand dollar, US dollar is still moving sideways, right? It's been in quite a bit of consolidation, hasn't really given us any clear direction for almost half a month now, right? It's has been kind of moving down in this channel. So we'll kind of see what happens in this area. But overall, like I said, if we're going to see some more dollar strength, then we're probably going to see this pair continue moving a little bit lower. USD JPY, okay, USD JPY or dollar yen, however you guys call it, however you address this pair. Little tricky right now, right? Because we're talking about, wanting to go long on the dollar, and it's hard to say, right? We aren't even saying we're wanting to go long, right? I'm just saying based on technicals, right? Based on just pure technicals and looking at the markets right now, right? What are we doing? We're making, just going back to the basics, just textbook price action, right? We're making a series of higher lows, right? And we're making a series of higher highs, right? You break this down on like the 1 hour, you're going to see it more, right? You're going to see the 1 hour. So textbook making a series of higher highs and higher lows. So overall, right, that's why we're saying we're expecting the dollar to continue to be bullish. But so, we can't really, that's not really like my view on what's going to happen, but that's just looking technically. I'm just giving you guys a technical outlook basically. So USD JPY though, the reason why I said all that before I started analyzing this pair is because based the technical outlook on this pair, we want to get long on the dollar. That's what it looks like is going to happen. But right now, dollar yen is very weak. We're seeing this pair continue moving lower. On this, lower time frames right here, it is still a little bit bullish, still an opportunity to go bullish. But overall, we look at like this bigger downtrend and we're moving a little bit lower. So I just want to see what's going to happen with this pair. We actually saw last week also, I fibbed this out before the webinar also. We got right down, we didn't quite touch it, right? But we got right down to, we got within a couple pips. So basically like 110 is our 50% retracement level. And we got down to like 110.10. So we got within a couple pips of our 50% retracement level, which is huge. This is that huge breakout that we saw towards the end of last year. It's pretty big to see a bounce off the 50% retracement level. So I'm kind of interested to see what's going to happen in this area because we did see that bounce, but on these lower time frames, we still are seeing this drop in dollar yen. But overall, I'd like to see it maybe pull around. Danny, you said, okay, I'll read this real quick. You said, I know you trade based off correlations. One thing that took off my guard recently is how, as a trader, we have to adapt to markets. For example, gold and UJ are only negative 72% when it used to be around 92%. And also random pairs like AUDUSD and is around negative 75% to pound yen. How often do you think these correlations change? How often as a trader would you want to check the negative 90? Yeah. That's actually crazy. Yeah, Danny, I'm glad you said put the negative 92% because I was gonna say the same thing. So you actually bring up a really good point. So if you guys have been trading, I'm just give me like two minutes to just say this, guys. So this is really important, especially if you guys want to take trading seriously. Which Danny, I'm glad you notice things like this. It sounds like you take trading pretty seriously. So I'm glad you noticed that. You bring up a really good example. So Danny is saying is recently, right? So I'd say probably, Danny, what would you say? Probably for the past, like 4 or, maybe like 3 or 4 months, or maybe even a little bit more than that, gold and USDJPY. Okay. So gold right here, gold XAU USD and USDJPY, dollar yen, they have not been correlating very negatively, right? They used to actually do like almost the complete opposite of each other, right? Like early last year, right? You could, if gold was going up, you could just pretty much just sell USDJPY, right? Or vice versa, right? If USDJPY was going down, you could just buy gold and it would just go up, right? And that was like early last year, so they had like a negative 92% correlation, but now they don't move that negative to each other. So if you see gold go up, it's not just like a surefire thing that USD/JPY is going down. So you bring up a really good point, Danny. So that's something that's really good that I think everybody should be very aware of is, if you're going to, use correlations in your trading, that they aren't always going to stay negative or positive the same amount for forever. With the exception of some things like the dollar index and Euro USD have almost always had like a negative 90% correlation, but because for obvious reasons, because the dollar index and things like that. But yeah, to answer your question, Danny, you're asking how often do those things change? I really don't know. I think you would have to talk to somebody that's been trading, like probably like 20, 30, 40 years, somebody a little bit older that has more like records and more experience. I've been trading for like 4 years. So, I've seen similar things like that happen in the past, last year also, not necessarily last year, but the year before last, pound yen and pound dollar used to really move really like with each other, really positive correlation to each other, and things like that. So, and now, now that the dollar is, really influencing gold and gold's really going crazy, that influences the yen, right? Which therefore influences the correlation between pound dollar and pound yen. So different things, but yeah, I definitely know what you're talking about. So anyways, guys, just to get back on track. Okay, so we talked about USD/JPY. And finally, USD/CAD. Not to sound boring, guys, but not interested in trading this pair right now just because of the consolidation. Yeah, that's that. Right now it just doesn't look like. Overall, if I had to give my bias on USD/CAD, it's interesting because we saw, it's hard to say because it's interesting because we saw oil rally so crazily last week, right? We saw oil bounce off this trend line so nicely, right? This technical trend line, because, oil, even as, commodities, just like gold and stuff like that, and in the dollar index, they still trade, technically based off technicals as well, very technically based. And it's pretty crazy because we saw oil, push up. So you would expect USD/CAD to drop really hard last week. But I think with the dollar strength, that kind of gave this pair put this pair in a little bit of consolidation. So kind of interesting last week. Sheldon, you said you're waiting on CAD to come up so I can sell it. Definitely. Yeah. I think that, yeah, selling it would be a good opportunity. In my opinion, I'm going to be waiting for like this support to be broken, pretty much this like whole level to be broken. Once that's broken, then for me, at least, that's going to be a pretty clear indicator to the downside for USD/CAD. But I would definitely be expecting that drop. So, all right, guys. Does anybody have any questions? If you have any questions, this is pretty much a wrap. Again, not to sound too boring, I really, sometimes I don't like the weekly webinars where you can't, get any trades in right away. But that's Sundays sometimes. I've been debating for a while possibly moving the weekly webinars to Mondays. That way there's a better opportunity for me to give out like free trades and things like that because the markets will have already made some moves. But, then I know, the weekends, a lot more people are available to watch them. So I don't know what to say. So, all right, I'm still like on the edge, but as of right now, still doing them on Sundays, of course. But, I think, I'm just trying to figure out what would be best. Do London Open. Yeah, possibly like a London Open. I was also thinking like if I do the Monday webinars, I do them like early Monday morning, like in the middle, like during the London and New York crossover. But, just a couple of possible changes coming, guys. But as of right now, everything's staying the same. So Be on the lookout for, you know, last week was slow. If you guys are in Slack, you saw my message in Slack, right? I've been having some like family issues and some family stuff coming up recently. So that's been kind of why I've been a little bit slower, not as active as usual, but we're getting past that stuff. So definitely be looking for, you know, some more activity in Slack and definitely in Telegram too, if you guys are in the free group. But if you guys liked what you heard today, if my analysis helps you make some money this week and you want to learn a little bit more about what we do, go ahead and head on over to our website, positivetraders.us. You can kind of read some reviews from our clients. You can kind of go and see what the premium group gets you. But yeah, that is our weekly webinar for the day. This is random, but the Instagram you're linking on YouTube is wrong. Make sure you change that, Danny. Okay, yeah, Danny, that might be linked to my Instagram. I'm not really sure. We just started the company Instagram, so I'll definitely go ahead and check that out. But thank you. I appreciate you catching that for me, Danny. And this will be uploaded. I'll have Cal go ahead and upload this within the next hour or two, guys. So I'll go ahead and post the link, of course, in Slack and Telegram and Facebook and everywhere for you guys. Make sure you guys are subscribed to our YouTube channel so you get notifications when it is uploaded if you are interested in watching the replay. But other than that, have a safe week, guys. Remember, use that risk management, guys. You know, reach out. You know, if you are new to you know, the group Positive Traders, go ahead and sign up on our website as a free member, and we have a bunch of links that you can use, like a bunch of useful links that you can use for free. We have a couple videos and stuff like that on our YouTube that you can check out that actually goes over like managing your positions properly and just basically proper risk management. So have a great week, guys. Remember, just good risk management. And other than that, stay safe, guys. Catch you guys in next week's webinar. Catch you guys in Slack and Telegram and Facebook. Message me if you guys have any questions, and have a great week. See you guys later.